It's back to Larry now for a closer look at the kind of market activity we're seeing in Kenya right now.
And the NIC 20 share index edged up just marginally yesterday. It was at 3,953. It went to 3,956.5 points. That's up about 0.16% for that 20 share index. Not as significant as some of us might have expected. 20 of the counters traded yesterday were up, 16 were down, the rest were unchanged at the NIC 20 share, at the Nairobi Securities Exchange as a whole. 4,000 is still the likely mark. We'll be asking one of our analysts in just a moment about that. On the shilling front, it seems a lot of aggressive mop-up activity from the central bank in terms of repurchase agreements, or repos as they are called, is keeping the shilling steady right now. Yesterday, the central bank was in the market for 8 billion shillings of excess liquidity. That's about $95 million. And that is what has been given the shilling a bit of strength for as long as anybody can remember, almost a year right now, considering the highest, or rather should we say the lowest the shilling hit was 107 back in October, and there's a bit of controversy, a lot of controversy around that. There was a parliamentary probe into what exactly happened and whether or not Central Bank Governor Professor Njuguna should have been fired for having sat back and let that happen. Let's bring in Samuel Washira right now, General Manager Drummond. You haven't been on our air for a while. Where have you been?
Well, Larry, a lot has been happening on my market, just like you mentioned. You're seeing a lot of activity, especially with the reduced CBR.
Yes.
This flight to quality, and you're seeing a lot of investors now shifting to equities. So a lot of activity on that front. You're also having a lot of rights issues almost back to back. We just concluded NIC. Now we are into Standard Chartered and CFC Bank. But definitely, I think it's been a very exciting period for us.
And those rights issues, we've talked about this for a while. We're almost getting to a point where we've had enough of rights issues, haven't we? Yes,
definitely. But look at it in terms of the positioning. Just like you mentioned, you're seeing Barclays trying to position itself. I think the financial services sector is really key for the sector of growth. And looking at it in terms of how these banks are positioning themselves, I think what they're trying to do is to strengthen their balance sheets. So even though if we're going to have a takeoff next year after the elections, they'll be very well placed.
And speaking of that Barclays meeting, because one of the senior executives we were speaking to last night, it was an off-the-record, so we cannot mention who or what they said, but the understanding is sometimes Barclays business in Kenya or in Mozambique or Tanzania for that matter is small compared to the global synergies they can have from having Barclays Africa. So if you need to make some purchases, you can use the ABSA balance sheet, which makes sense.
Yes, definitely. Look at it in terms of the profitability of the Barclays Kenya and compared to like the global brands and the rest. I think that is a bit of a concern because the bottom lines are not as strong in terms of the numbers. But looking at it in terms of the Kenyan and especially the region, Kenya, Tanzania, Uganda, I think Kenya has emerged as a star performer. And I guess the challenge would be just what you're mentioning in terms of the kind of returns they're getting compared to the regional markets as well as the other global economies.
Okay, let's talk about the NIC 20 share index, which is not going up as quickly as I would have wanted. I thought it would be at 4,000 by yesterday. We're at 3,953. We only picked up, what, 3 points?
Well, we are just about to close the third quarter and get into the fourth quarter of the year. And I think some of the things which were creating a lot of activity, like for industrials, have already announced their results and they're just about to close for dividends. So I think that factors in a lot in terms of how the market is performing because most of the shares now are really trading come dividend, come bonus and such. And because of that, I think there's a concern. But just like you mentioned, I also hope the market will pick up because the interest rates have started going down and we would expect investors to shift to equities and create a lot of activity. But we cannot forget that we are also going to an electioneering period. So I guess investors are a bit cautious and in that sense, they're trying to make sure that they don't again expose themselves too much.
Let's talk about Longhorn Publishers. It just came on the market and then we're getting a loss, 26 million shillings, especially because the government cut funding for textbooks. That is the first full year we were hearing from that company. Is this an indication of where to go? And does that mean textbooks is not a good business?
Well, I think even when we were having Longhorn, we really discussed that because we are concerned about how they will perform because we are seeing a strong shift towards IT. And
we said it's an old media company.
Yes. And I think the fact that this has come out as a loss in terms of their performance, I think is already confirming what we were concerned about. And I think what we want to hear from them is how they are diversifying in terms of ensuring that they still sustain their performance, but not rely too much on these hardcover books.
Because it publishes in Uganda, in Tanzania, and Rwanda, but its mainstay is textbooks. You don't know whether or not your textbooks will be the approved ones or what might happen. There might be a strike. There's too many things that are at play.
Yes, definitely. And also just like you mentioned, if you are relying too much on just one key supplier to be able to sustain your business, I think that is a risk that they should be able to try and see how they can mitigate.
Yes. Okay, let's move on to something else that's equally interesting. And this time I want to talk about the 15-year bond opening today. That's an interesting one in terms of just how much activity this might be able to pick up. What do you think?
Well, for a long-term bond right now, I think in terms of how the market has been playing, just like we were discussing, I think the last time, we were concerned about the fact that central bank has not, even the government has not issued a long-term debt instrument for quite a while.
Yes.
They'd even opted to go sovereign in terms of financing. But for them to do that, I think they're trying to stabilize the interest rates. And I think that's a good indicator for our market, because the yield curve had really been twisted because of the fact that last year we saw a lot of shifts in terms of the performance of the interest rates. And I think for them to do a 15-year bond, I think the uptick might be not as good as we would expect, because I think the market is still fairly unclear in terms of the direction of the interest rates. But I think in terms of the stability of the rates, I think this is the way forward.
How about the stability of the shilling? Still very aggressive mop-up activity from the central bank, and that is giving the shillings some support so far. Yes,
looking at it in terms of the shilling, yes, that just like you mentioned, I think the CBR has in a way affected how the shilling is behaving, and a lot of importers are a bit concerned in taking positions regarding the same. But I think central bank has come out strong, and just like you mentioned, you're hoping that Professor Ndungu is going to be a bit more vigilant in terms of ensuring that whatever happened last year does not repeat. But I think central bank is very key this time, just to make sure that it supports that.